Welcome back to the Williams Real Estate channel. Today we are discussing the property market update for November 2025. To kick it off, out of totality, we saw a 1% increase for the Australian property market across the board, consisting of 1.1 for the combined regions, 1% for the combined capitals. So out of November, we saw the leading market being Perth, up 2.4%, followed by Darwin, Adelaide, Brisbane at 1.9%, followed by Hobart at 1.2%, Canberra 1%, Sydney 0.5%, and Melbourne 0.3% for the month of November. If we look at the past month for the regions, we saw regional WA, the strongest market, with 1.7% up for the month, followed by regional Queensland and Tasmania up 1.3%, followed by South Australia 1%, regional New South Wales 0.9%, and regional Victoria 0.8% for the month. So pretty strong month across the board. Nothing in negative. It's all booming in every market. And if we look at the 12 months to date, the leading market for the past 12 months was Darwin, up 17%, followed by Perth, 13.1%, then Brisbane at 12.8%, Adelaide, 8.2%, followed by Sydney at 5.1%. Then we had Hobart at 4.7%, and trailing with Canberra and Melbourne at 4.2%. And now if we look at the past 12 months for the regions, the strongest market was regional WA, up 15.3%, followed by regional Queensland, 11.4%, South Australia, 10.4%, trailing with regional New South Wales, 6.2%, regional VIC at 5.1%, and regional Tassie with 4.6% for the past 12 months. Now, I also like tracking the median values. We have in first place Sydney at 1.269 million, followed by Brisbane at just over $1 million median price point. Then we have Perth at 914,000 median price point. Canberra, 891,000 in fourth place. Adelaide, much of the same in fifth place, 891,000. Then we have Melbourne in sixth place, still at 823,000. Hobart at 703,000 in seventh place. And finally, Darwin with 578,000 median price point in eighth place. Now, if you wish to know where we're heading into the future, the longer back you study, history will allow you to paint a picture of where we're heading into the future. And if you've been following us for some time, you know we use the 18-year land cycle framework at a macro level to work out, firstly, where do we sit in the market, being on that blue marker, equivalent point of time, late 2006, now coming into 2007. So from that, we then peel back the layers and look at every market across Australia. As there's not one property market, historically, Sydney, Melbourne outperform in the first quarter, followed by regional Victoria, New South Wales, ACT, Tassie outperform in the second quarter. Then Brisbane, Perth, and Adelaide outperform in the third quarter. And now that we're in the fourth and final quarter, we'll see the likes of Darwin, regional South Australia, WA, and Queensland outperforming in the fourth and final quarter. That doesn't necessarily mean we're buying in the same quarters where we are currently sitting. We always sit around 3 or 4 years ahead of mainstream. So we're looking across Sydney, Melbourne, regional Vic, and parts of New South Wales ACT, early stages, early investigation, very early stages, but we're always ahead of the curve where the mainstream tend to pour into the final FOMO Fugazi craziness toward the tail end, which we never suggest doing. We haven't been buying in Brisbane for 3 years now. So we did get into Brisbane early on, 2018, 19 to 23. But as of 23, we have been sowing our seeds in markets in preparation for next bull runs rather than fighting over the masses once it already picks up and starts to run hard. So from here, if you visualize from 2007 and onwards is a framework, a guide you can use for what could happen to each of these markets moving forward as we head into 2026 and beyond. Adelaide, as you can see, has had a solid run in the last couple of years, starting to show signs of hitting a top. And if we look back at history, 2006-7 hit a top and then went through a pretty well stagnant flat period. So Adelaide is definitely a market we are not buying in as of late and probably won't for a good 10 years until the next bull run is set to set in. Followed by South Australia, as you can see, solid run since 2019. Hasn't quite shown signs of hitting a top yet, but seems to keep powering on. And if we look back at history from 2006-7 and onwards, had a bit more modest growth and then leveled out and pretty well went flat for a good 10 years. Perth is booming. As you can see, came off a base in 2019 and kicked off and isn't showing signs of losing steam yet. And if you look back at history, similar pattern happened and come 2007-8, it then leveled out and went up and down within this range. Was still pretty buoyant throughout the mining boom, and then once the mines slowed down, it also counteracted the property market. So at this stage, we're not buying Perth. A lot of people are getting caught up in all the fuss, but there's definitely other markets that are at less risk in terms of the future years ahead, where you'll still get the solid growth. Regional WA, even more so in a risk of the downside at this stage. As you can see, this is down near Margaret River Way. Houses in the regions we like looking at are now hitting 750 median price point in this particular suburb of this town. And if we look back at history, continue to go strong and at some point will switch off, just like what happened in 2006-7 and went backwards for over a decade. So it's showing signs of maybe losing a bit of steam. This could be it. Time will tell, but we're due. Regional WA is definitely a market that we are not buying in 2026. Brisbane is still going strong. This is in the Logan area, half an hour south of Brizzy. I've got a few properties there. Looking to probably offload them come early next year. We'll see how we go, but I believe that might be my plans as I'm looking to pay down debt, raise cash, reinvest it into other markets to ride the next wave, as I don't see Brisbane continually outperforming the way it has, like what it has over the last couple of years. As if we look back in history from 2005, 6, 7, it went strong and then topped out, leveled out, and went pretty well flatlined for a good decade. So again, another market we're not suggesting buying in 26 for the coming years, as you will be buying the future growth and not what has been historically. So be sure to get in the right markets. Regional Queensland is await the races. Tracking this one, this is another chart for a house I own in regional Queensland, tracking them every month as I'm looking to offload these definitely at some point. As you can see, it's going strong and continued to go strong from 2006, 7, 8 up to 2009, but then come 2009, switched off and went backwards a good 40% over 10 years. So I would rather offload peak market, preserve capital, pay down debt, raise cash, free up serviceability, reinvest the capital into larger assets, just like playing Monopoly. You buy 3 or 4 greenhouses, you roll it into a hotel in a market that will double, if not triple, in the same period where this market will be going backwards. So this chart, very similar to the likes of Cairns, Rockhampton, Townsville, Derby, Warwick. All the regional towns move in this similar rhythm. The further north you go, the bigger the boom, the bigger the bust is. So buyers beware. Anyone that's buying in regional Queensland in 26 is definitely going to find themselves in negative equity. So it's definitely not a good idea to continue to buy in those markets. And it's even worthwhile getting the report of your specific property, running it, and working out whether or not it's something you want to hold long term throughout the coming downturn. Darwin is picking up and starting to pick up again. Probably will see something similar to the likes of 2007 to 13. Yet to see whether or not our minds are going to pick up and be as strong as they were in the prior cycle. They're not yet. Time will tell. Something we like to keep tabs on, Darwin, but definitely not a market I like to invest in. As you can see, this medium price point is at 450. You can buy same, if not less, in more resilient, stable markets like Sydney and Melbourne for the price tag of Darwin. So definitely not a market we like to buy into or suggest buying. As you can see, it's very volatile, but I get why some people get caught up in all the fuss once the boom takes off. Regional New South Wales, we love regional New South Wales. We were buying many properties in regional New South Wales from Maitland, Muswellbrook, Tamworth, Lithgow, out to Orange between 2017 to 2021. We haven't been buying since. As you can see, it's had a solid run in that second quarter, topped out in 22 and has gone through its downturn, stabilized, and is now showing signs of entering its stagnant period, like what will probably happen for the next 7-8 years, similar to what happened from 2007 to 15. So regional New South Wales, we love it, but is not hot on our list at this stage. There's plenty of time. The only time I'd say at this stage buying in regional New South Wales is if you were to be scaling up and buying a more cash flow asset like a block of units rather than individual units or houses for growth play. The growth is not in regional New South Wales within the next 5 to 7, 8 years. You can definitely put your capital into markets that will have an uplift within the near term than regional New South Wales. So definitely time on regional New South Wales, but will come good in the coming years. Same goes for Tassie. Similar story. I know a lot of people are charging into Tassie recently. This is probably what this little uptick is here, but it will continue to go through its stagnant flat period, similar to what happened in 2007 to 15 for the coming years. So again, definitely time on regional Tassie. We'll get down to regional Tassie in time, but definitely not at this stage of the cycle. Same goes for Hobart, topped out in 21, 22, has gone through its downturn, showing signs of stabilizing, and will probably go through a little bit of modest growth, but then more or less flatten out for nearly a decade. So again, time, 5, 6 years time on Hobart before it's probably worthwhile entering again in the coming years. Regional Victoria is starting to show signs of picking up. Could be similar to what happened in 2006 before it dropped off again. So it is starting to come good. I see the yields. We recently purchased a house in regional Vic, 350 grand, 6% yield. So once the yields become about 6%, that's a good time to enter. I don't suggest entering a market when the yields are still 3, 4, 5%, because essentially it's still overvalued from the previous boom. But the yields are starting to come good, provided you can get the good deal. So we're very selective at this stage on regional Victoria. If the deal's right, we'll go for it. But most of the market right now is still relatively overvalued from the previous boom, and will probably be a couple of years time for the rents to rise to make attractive yields. That's then a leading indicator for growth. So it is coming good. As you can see, won't go through as stagnant flat period like regional New South Wales and Tassie, as those towns are a lot further away from the metro market than the likes of Geelong, Ballarat, Maui Moel, Bendigo. The towns are all within 2 hours, so they won't go through as longer stagnant period. So they could be ready to go in the coming years, and we are starting to pick off the deals as they arise for clients that have already got themselves into the likes of Sydney, Melbourne, Brisbane, and they're looking to sow their seeds ahead of the coming bull run in the years ahead, where they're not necessarily reliant on an immediate uplift in equity, because you won't get it in regional Victoria. So good time to start, but only for the people that have properties in other markets that you're getting immediate uplift, because there's definitely other markets such as Sydney in the coming years, as you can see, has been stagnant since its 2017 top, has been going through this range of around 500,000. And if you look back at history from 2007, 8, it started to lead and take off again. So Sydney, definitely a market you could explore if you're looking to get some growth in the coming years. And same goes for Melbourne. There's nothing better than Melbourne in 2025, 26 and onwards. It is coming off a very low base. It's the sixth most affordable market in Australia, behind Sydney, Canberra, Brisbane, Perth, Adelaide. Historically, it's second behind Sydney. So Melbourne's coming off a very low base, has had a tough time through the COVID years, being locked down. A lot of people left, and the sentiment around land tax. But if you hold property across multiple markets and regions, you'll find that Melbourne's holding costs are actually quite low, even though they do have land tax to pay. The rates, Owners Corp, are a third of the cost compared to the likes of Brisbane and regional Queensland. So don't get fooled. Don't get caught up in all the noise and the media bullshit. They just like to drum up a negative story. It's not the reality of the situation. So Melbourne is definitely a good market to get into to get immediate growth, and then you can recycle the equity out and continue to keep building out the portfolio as the markets come good. So Melbourne, all-time low, rents are rising, prices are even starting to rise. Sydney's coming good. It's at an all-time bottom. Rents are starting to rise. Regional Victoria is starting to come good, is starting to enter its stagnant period. As I said before, you won't get the immediate uplift straight away, but if you're not reliant on it, then it could be a market to start thinking about. Hobart, Tassie, New South Wales, they've got 3 to 4, 5 years to stagnate out. There's no rush on those markets, so don't get caught up in all the fuss. I know some buyers agents are starting to buy down there, but cheap today can mean cheap tomorrow. You can buy a house for 500-600 grand. It could be the same price point in 6, 7 years' time. So timing is key. Adelaide, South Australia, they're showing signs of early stages of market top, followed by Perth, WA. Probably have 2 years, 2 or 3 years to run in this final FOMO state, which is the worst time to buy, is in the FOMO. That's when the uplift, you might get 20, 30% sugar hit towards the top, but then you probably end up losing that final growth once the downturn sets in. So it's never a good idea to keep buying into the overheated, stupid markets when every man and his dog likes to plow in. So definitely not buying in Perth, WA, Brisbane, or regional Queensland. And Darwin, I mean, you'll probably get growth, and it's probably not past the point of no return, but for its volatility and its price point, it's not a market we like to focus on. So that's a snapshot of where I see each market sitting as of November 2025. We'll keep tracking the markets as they play out, as the evolving current 18-year land cycle comes to an end. It'll be very interesting times ahead, as you'll see most people that continue to keep buying into these markets will land themselves in negative equity in the coming years. People that buy too early into these markets will buy properties and wait around for 5, 6 years and have next to no growth. And the people that start to buy in Melbourne and Sydney at the right price points with the right yields and the right asset class will do well and prosper in the years ahead. If you want help, shoot us an email. We can jump on a call, discuss where you're at, see if we can work together. We can map out a plan to continue building out your portfolio from phase 1 to phase 2 to build out a solid 10 plus property portfolio. As always, this content is general in nature and is by no means financial or general advice. Before making any acquisition, please seek independent financial advice. But if you wish to build a long-term sustainable portfolio, get in touch today and we can chat to you soon. Until next time, thanks for watching.